understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.
Happy Friday. We're back for another episode of the Tech Behind FinTech. Extremely excited today. We are going to be talking about the death of legacy lending, how modern platforms are changing the game. Joining me is the CEO and co-founder of Neofin, Svitlanka Sergiichuk. Very happy that you're here. Welcome to the show.
Happy Friday. And glad to be here. Thank you for having me.
And I've been like offline working on the pronunciation of her name and trying to get it right. I hope from a scale of 1 to 10, what do you rate that? That
was a solid job. That was definitely 8.5 or even higher.
I'll take it. I absolutely love it. So from housekeeping perspective, before we jump into this episode, we are streaming live from Facebook, LinkedIn, and YouTube. On those platforms, you can drop a comment and you'll be part of the show. We also have a stream going from Instagram. Those on Instagram, you can go to the Tech Behind FinTech and click on a live stream. So if you want to comment, they'll be part of the show. And that is it for the housekeeping. And now I'm excited to jump into our show. So like I said, show title today is The Death of Legacy Lending, How Modern Platforms Are Changing the Game. And I'm here with the CEO of Neofin, which is a no-coding lending automation platform. So let me introduce my guest officially, and then we'll jump in. Svitlanka is a co-founder of Neofin, a lending automation platform that enables financial institutions to seamlessly launch and manage loan products with speed and efficiency. Her passion is to help lenders bring sustainable, innovative loan products to market, making innovations in lending accessible to any financial institution, regardless of its size and geography. Under her leadership as co-CEO, Neofin has expanded to 11 countries across North America, Europe, and the Middle East. It continues to grow. Svitlanka is an alumna of some key fintech programs on the market, including Equifax Accelerate, MasterCard Start Path, and WMN FinTech by BMO. Speaker at major FinTech conferences such as Money 2020, CBOS, and a winner of competitions such as North America's Women Tech, active advocate for the social initiative fostering the visibility of the immigrant founders, female leadership, and innovation. And at those rare moments when Svitlanka is not closing deals or building lending innovations, you can find her on a snowboard or in an outdoor pull-up bar gym. I'm biased. Out of everything, your accomplishments are wonderful. Hats off. But the last part, because I'm into fitness and health, I love that last part.
That's an important part of life of any entrepreneur. It's like you need resilience in business, and that comes naturally when you have resilience in your body and health.
And we're going to get into it later on the personal side, but I was like impressed because before we get into it, you have a pull-up number. Like you can do how many straight pull-ups?
21.
Amazing. I mean, I don't think people realize how hard that is. Like pull-ups are, I know guys who are, big bodybuilders and they can't pull themselves up like one time. So that's pretty impressive. And I want to get into that at the end so you can give some tips to people on how they could increase their pull-up game. But to get into it, right? We're talking about legacy lending. And I want to understand, like, can you explain what Neofin does? And I want to get into the problem in the market and how you're solving it and dive into what is currently happening in the market.
Sure. So Neofin is a lending automation platform. What we do is we help the lenders around the world to launch innovative loan products to market at a record speed without massive investments of time and money before your launch. So what is the classical life cycle of a loan? So everyone knows that the classic life cycle is there's the loan application, then there's a loan decision, and then there is the loan funding, and then their repayments are charged and the loan is closed. But all of this life cycle is enabled when the loan is actually active and live on the market. Usually in the classic lending, an institution needs to invest at least a couple years of time before going live with a loan product. This used to work some time ago, and it's much harder to make it work right now when the market is much more dynamic and the momentum is much harder to catch. So what we do is we enable those institutions to push their products live from the idea to market within 3-4 months on average.
So 3-4 months in average.
Yeah. So in 3 to 4 months, they can start already issuing real loans, working with real customers, getting the real traction, understanding what are the real risk parameters, what are the real policies that are required for this loan product, and tweak them on the way, already generating revenue and making money while their competitors are still setting up.
How long does it take to launch a new loan product using a legacy system?
Using a legacy system, it can be a year or more.
What attributes to the speed of reducing that time by such a huge number, right? Because you're saying it's a year or more to launch it using legacy platform. How do you speed that up exactly?
So first of all, this is the whole technological philosophy with which the platform is built. Because for Neofin stands on the 3, blue whales of the philosophy. One is keep it super simple. It means that every operation that the loan product owner needs to make on the product should be accessible and easy to make. So we are against any vendor lock and against any critical dependencies of the customer on the vendor. Because in the classical building for the loan products, how does it usually work? You need to do something, you need to change something, you submit a ticket and then you wait. You can wait for a month, you can wait for 3 months, you can wait for 6 months until it is done. With Neofin, the philosophy is different. We need to keep it super simple. So every customer has access to their admin panel, and depending on their permission rules, they have access to fully manage and rule their business processes and business logics related to their lending operations. So when they launch or when they need to launch and they understand that this particular cohort of users requires this particular additional check for the risk policy, they go ahead in the admin panel and they do it themselves in 5 minutes instead of waiting for 3 months. So the whole technical philosophy is one part of the things. The other part of the things is overall flexibility and integrability of the platform. The platform is super open to external integrations, to integrating various external solutions that are complementary and that are helpful for the customer in their lending process. So if the customer wants to involve the voice calling solution, they can do it within like a day's time. If the customer is willing to leverage the usage of alternative data, they can do it in the day's time. Again, there's no need to wait in the line just because all those features are made accessible. So, and the other one is have it end to end. So Neofin is like an umbrella. It provides all the necessary building blocks that are required for a loan product to go live, from the origination through management, through servicing, and including the front-end layer. So this umbrella keeps the loan product end to end, and even if the customer has any existing solutions, they can be incorporated on any of the stages due to overall integrability of the platform. So 3 whales are keep it super simple, and have it end to end and integrate fast.
That's interesting, right? And let's take a step back because I want the audience to understand. So that's what's happening now with Neofin and the innovation that you brought to market in terms of shortening the life cycle, keeping it simple, making it open so that the users can configure it on the fly, right? But if we take a step back to what was done, what's been done historically, right? How does can you help me like understand that full process? So there's a team that on the business side, they say, okay, you know what? We see that our customers, or where we're introducing a new product, we think that this loan product can work for our user base. Can we use, for an example, a loan product like a mortgage? Is that acceptable? Can we use that, or?
We do not work right now specifically with mortgages, but we work with unsecured consumer loans, secured consumer loans, and small business.
All right, so let's go with that example. So let's do a secured an instrument loan. How does it work traditionally when they try to launch this prior to the innovations that you put forth?
So it all starts with the planning. And the planning should start usually with testing and identifying if this exact user audience that the product is targeted to is going to be a productive audience for this loan product. So if they're going to be actually like generally eligible to this type of loan product, and if it's going to work out. Then the planning starts, and the planning should include all the marketing efforts towards the loan product and technical efforts towards the loan products, and then like evaluating the investments needed on the marketing and on the technology. The decision is made to go and move forward with the loan product. Then the building stage starts. The building stage starts with the ideation and then technical assignment, and then implementation with the platform. Most of the platforms would be highly specialized, either specialized on a certain stage of the loan product's life cycle, for example, specifically loan management or specifically loan origination platform, or on a specific product. And this is a very classic situation, especially on this mature financial market such as North America, where there are the solutions that were, let's say, born and built initially as a student loan platform, or born and built initially as a car loan platform, or born and built initially as a microfinance platform. And then the business already has like a lot of dependency, a lot of business processes are attached to that platform. So they need to find a way to launch a new loan product with different audience, with a different with different settings that are usually like frequently they're like hard coded. They need to figure out how to make this new product work, and then for any new product to work, it has to be included in the general lending ecosystem of a certain geography. So you cannot like it's not the product that can exist like separated from all the ecosystem. What does that mean? There is a credit data, there is the banking data, there are payment solutions, there are the solutions that empower the lenders to estimate the credit worthiness and so on. So all of that need to participate in the loan process. If the system has not been initially designed to, for example, apply alternative data, and has only been designed to work only with the classical credit data from one credit bureau, it takes a lot of time and effort to make it work otherwise. And we've seen a number of cases when alternative data ended up not being used just because of how hard it would be to implement it with certain technology stack. And moreover, we've seen a number of the loan products that have never made it to market after, let's say, a year of efforts, or after a year and a half of efforts, just because of how hard technically and how expensive of an investment it was taken from the lender to implement.
Oh wow! So what I understand, right? Traditionally, they'll take a platform that may have been used for something else like you said, like automobile lending or microfinancing or different
Yeah.
things like that. Now they'll try to make certain configurations or changes to suit the new requirements of this loan. And what you've seen over time is because of the technical complications of trying to retrofit these new features in some of these loans, although they have they identified a customer base that can leverage it, they just couldn't bring it to market just because of the implementation complexities and that it involved.
Yeah, exactly. And we had the situations when, like, one of our customers right now, they're launching a revolving credit line. And they've been working for years with a very well-known and well-funded lending platform that just did not have the technical functionalities and technical capacities to support the flexible revolving credit line that the modern market needs. And it took a year to understand that it's not going to work.
Oh wow. So what I want to understand now, okay, so now we see the problem, the problem in the industry, right? You have situations in which, especially, and these are, when you look across the board, we have banks at all levels, so from community banks to regional banks, that sometimes I think outside looking in, if you're not in the industry, you may assume that these banks have a lot of resources because you're thinking about the commercial banks like the JP Morgans of the world or Bank of America. But when you start looking across the board, like regional community, they may not have the technical resources to do so, but they may have really great ideas in terms of the different products that can impact their end customers. But now it's bringing it to market. So you've seen situations, even if internally they could be using an existing external lending platform to try to bring this product to market, and there's still issues in going through the implementation side. Is that accurate?
Exactly. Yeah, exactly. And we know we're not particularly targeting banking financial institutions. So our key focus is non-bank financial institutions and international lending groups and financial holdings that are also like mostly non-bank. Sometimes a group does own a bank, but as a part of the group. But in general, when we were starting the customer development, especially here in the North America, we had giant banks from like top 10 of the North America's banking institutions in terms of the size and capital and assets. And they were absolutely feeling the identical issues. So they were VIP customers of their platforms. And then whenever they needed to launch a new consumer loan product, they would need to wait for like 6 months for every request to be fulfilled, which extends the product launch pipeline indefinitely.
And I would assume, when you come out with this concept of the loan product that you want to bring to the market, in that year of waiting, right, your customers' wants may have shifted because everything's moving concurrently. So it's not that, okay, I have this idea right now, we're bringing it to market. The same customers are going to be available a year from now. They may have found another solution. They simply may not want it anymore. Their needs or wants may have shifted. So it's a plethora of things that can go wrong in that time period. If it, even if you do happen to launch it and everything goes right. So now help me. So now you understand what's going on. It's a big problem in the area. You're looking that, okay, you're seeing that bringing loans products to fruition is this huge gap of time. How did the idea come about to shorten that? Like, how was that process?
That was like this idea was kind of born simultaneously into different worlds where myself and my co-founder were existing. So my co-founder Alex used to be a CTO in a number of digital lenders and a prominent bank in the Eastern Europe. And as a bank CTO, he was like feeling the same pain on the customer side whenever he needed to launch a loan program, it would take him ages to just get things done. and ship the product. And he, as a CTO, was feeling this huge responsibility to ship the things on time. At the same time, at that time, I was a GP in a family office that was investing in businesses of Ukrainian origin. I'm of Ukrainian origin myself too, so it was very close to my vision and values. And I ended up on the board of a fintech development company, and there was a lot of friction as to like whenever you need to build a program for a financial institution, it takes much longer than it should. So that's how we found each other, because we started, developing the same idea in parallel. I was more on the side of a vendor, of a builder. He was more on the side of a customer. And we joined forces to build the infrastructure we wish the world had in place. And from the very beginning, we just decided on a concept that we only hire the builders, so all the developers, all the engineers, all the technical stuff that used to work in a lending company, a bank, but preferably a lender, because we want all of them to experience previously what our customers experience now, and just like they're all united to make the change happen.
Right, so that makes sense, right? So you're going after people with previous experience. They suffered the pain. They understand it from an industry perspective, and they've been through it. So now everyone's aligned to like, how do we shorten that gap? I've read, that you use in Neofin, you used a no-code platform. Can you explain how that works?
Sure. So it's not that some external no-code platform that we use. What we mean is that Neofin itself is largely a no-code lending automation platform. So 70% of the functionality of the platform is covered with the no-code mechanics. It means that the customer, for example, the chief loan officer, or a product owner, or an analyst, anyone without the specifically technical code and background, can go into the admin panel and build the business processes on top of Neofin that are required for this exact loan product. So if you need, for example, to fine-tune your risk strategies and to adapt the rules to the current audience, you can do that. If you need to set up a new campaign with the triggered messages that are tied up to certain events so that your customers receive timely reminders when their next payment is coming up, you can establish those templates and you can go ahead and set that up without a need of hiring a developer for that. If you need to launch and release a new landing page for lead acquisition for your new loan product, you have your site builder, you have the components that can be adapted to any design, and you can go ahead and do that with understanding the product, but without necessarily involving the engineering staff, which is frequently massive. So we work with the customers that have like 400 people in engineering, like 1,000 people in engineering, but they have their huge backlogs and they have a lot of tasks to do. So no code means the customer can manage 70% of the platform's logic without involving any technical stuff. And this 70% actually covers most of the changes or modifications that the customer usually need to do with their loan products.
So is that even more expansive than like a minimal viable product, like an MVP? They could actually build out, because I would assume, right? They have these, correct me where I'm wrong. They have this vision or an idea from a product manager's perspective that this works for the business and this works for the customer. We can bring out this loan product. You know what? I want to test this concept out, and that's obviously if they're a customer of yours, right? I want to test this concept out and see how it, like the vision, and I can basically turn that around in I don't know a couple of days just by plugging and playing some aspects, and that can serve as a pilot or an MVP. Do they use it like that?
It can be, but I wouldn't say that we're a platform for MVPs, because we work with the companies that are launching real products that are used by millions of people. The platform is processing hundreds of thousands of loan applications a day. So I wouldn't call it MVP. I would say it's a launch. So it would be I would say it would be an illusion and a lie from my side if I would just say that, hey, you can get your product in a couple of days. You can definitely have your MVP in a couple of days. You can definitely have something workable in a couple of days, but that would not be like a full-fledged financial product that complies with all the financial policies and regulations and has all the data points connected and has all the necessary, building blocks ready. So that is not a task for a couple of days. So of course it allows to launch an MVP, but the actual goal is to launch the loan product and scale it.
No, that's totally understandable. So in looking at that, right, and when they do that, so they launch 70% of it. Well, most of, like you said, most of it. That 30%, how does that process work in terms of getting the full product out?
So usually when we are signing up with a customer, there is the first stage of the setup and implementation. As mentioned, we are launching the loan products right now on average within 3 to 4 months. So during this 3 to 4 months, our team works very closely with the customer's team with a knowledge transfer, teaching them how to use the platform and also setting up all the system parameters to make it work for the customer's business case, because the business case are very versatile. It has historically happened that people come to Neofin when like they need to launch something and it's something they have not launched before, and it's something they have not found any existing technical solutions to be able to handle. So we've had several situations when we're launching the first product of a kind in this geo. Like we were launching the first automated car loan flow in Central Asia. We were launching the first, small business loan of a type in the Eastern Europe. So it's frequently the case. So these months, like 3 to 4 months, are needed to like fully set up the system according to the customer's parameters and requirements, and then it goes live. And when I say 70% of the system is covered with a no code, I mean that most of the settings and regulations are just available for the customer to manage from the admin panel. And then there are things that are, more like low code, which are essentially new integrations of various external solutions, where some slight part of coding should be done, or like, for example, reportings where like every country would have its own regulatory requirements on the reporting. So this is something that needs to be built out. But due to the overall nature of the platform that is built to be flexible and integrable, it again does not take years. It may take weeks.
Regulation and compliance. What are some of the in lending? So we could just, from the audience perspective, understand it. What are some of the biggest compliance risk in lending today?
So for us as a technical platform, we need to be very attentive with being compliant at the level a technology platform should to be able to serve the customers in the financial industry. So this is a very big part of our activities, and this is something that we take care of on a regular basis. So we need to comply with ISO standards. We need to comply with SOC 2. We are being scanned by independent auditing parties for vulnerabilities and for general system resilience every quarter. So we're getting the external scan reports. We're constantly, improving our package of compliances. Just like this week, we announced that we got the highest tier of compliance for GDPR for European Union. And then as long as you're compliant with this like big and internationally recognized compliance standards, it's much easier than to comply with the local regulatory requirements. Because, for example, if we take Saudi Arabia, or if we take countries like Romania, like every country will have their own regulatory climate, but there will be like 90% of overlap with what we've already done for ISO or what we've already done for GDPR.
No, that makes absolute sense. Because once you have the ISO, the SOC 2, the GDPR, and things like that, you may have the it's a California, it's a compliance act in California, but it looks at it's similar to like the GDPR. So yeah, that totally makes sense what you're saying. You know, like then going after, because you expanded to 11 countries. You know, how was that process?
Yeah, so that was a part of our global vision, because our idea was to build a geography agnostic platform that can be launched in any part of the world, because the goal is to make the innovations in London accessible to any financial institution, regardless of its location. So, in order to enable that, we have built a platform adjusted to work internationally. So it has the ready API methods to integrate in the local data climate, to integrate in the local regulatory climate, and a flexible product engine that adjusts to the local requirements and criteria. So our customers are often international lending groups that run operations. They can have operations in the North America, in the US, in Canada. They can have operations in South America. They can have operations in Europe. And sometimes, and this is often the case, when we're going with one of the products and one business model, it proves successful in Europe, then they want to replicate it in another country, and then in another country. And we, as a platform that serves these groups, need to be ready to scale across the borders.
In that global vision and expansion and doing it, what's one of the biggest lessons that you've got or you've taken in from that expansion? Like what's some of the biggest lessons from going to these different countries and launching that you learned along the way?
I would say a huge discovery for us was when we just started going international. We started international scaling with North America. And one of the biggest discoveries was that lenders are experiencing universal pain globally. So the infrastructure is rigid and the loan products are hard and take long to launch. Where we go in the world. That was a big discovery for us when we understood that we just need to solve this problem globally. Speaking about the lessons, I would say that like one of the big lessons was to never underestimate the peculiarities of the local data climate. There was a lesson that made us build those API methods and made the solution integrable to local, like as integrable as possible with the local data solutions, and as flexible as possible, because not every market would have the similar credit bureau data structure from the credit bureaus. Not every market even has credit bureaus. And not every market can afford to rely on the classic credit data, because often it would be like super limited and it would require the alternatives. So that was something when we started going international, that was something that pushed us to build a technical roadmap around leveraging the right data, and also around leveraging a lot of internal data from the customers. So that is gathered, through other channels and other sources. And I can provide examples. We're building out right now one of the all-in-one loan solutions for a large group in Europe, where there's not much. It's a very, cash saturated market. Cash is very popular. There's not much traditional credit data, but this is a financial group that owns multiple institutions, including the retail chains. So we are helping them leverage the retail data on the buying behavior of the users and use it as the data attribute for further credit worthiness assessment of those users. So building out that data flexibility, that was probably a big lesson.
Yeah, I can see that. Like, in doing this show, I've had conversations with fintech leaders globally, and that's one of the challenges, right? In certain markets, they don't have traditional credit bureaus like we have here in the U.S. or North America.
Yeah,
So, I've talked to someone like you said with the retail, they were leveraging the like they know people have to shop for food, so they were leveraging data from supermarkets and their
yeah,
buying habits and so forth to seeing how that can serve as credit worthiness and also serve to introduce them to new products and so forth. So, that's interesting that you mentioned it. So when you go along that path, that's when the customization happens. In those scenarios, the timeline I would assume probably gets extended
yeah,
because
it does.
yeah, okay, like on an average, like how much more time? Because like average, you said like is 3 to 6 months, but now dealing with that and the non-traditional alternative credit data, how does that process work?
Um, so yeah, it can extend the timeline. You're right. So it can go to like 6 months, 7 months, but still, um, we still believe that it should not take years. And
Okay.
we still think that the MVP needs to go live as soon as it can go live. So it just brings a lot of value to catch some things on the go, on the fly, and fine tune the system on the fly rather than spending years building on assumptions.
But after that, when you do projects like that, do subsequent projects become quicker now? Like because you start dealing in
Absolutely.
markets with non-traditional data, now you get other markets in the as you expand globally that have
Yeah.
similar issues. And I would assume it gets quicker at that point.
Absolutely, absolutely. Like the first car loan would always be slower than the second car loan, and the second car loan will be slower than the third one, and after fourth one, it just gets like a conveyor. Absolutely. So our goal is to like whenever we can speed it up and achieve like 2 months or achieve like 1.5 months, we would go for it because the goal is to help the customer go live and start generating traction as soon as they can and just go ahead of competition.
What what alternative credit products are you excited about?
As for the alternative credit products, I would say that right now, what makes me particularly excited is a variety of the loan products that are coming to the market as an alternative to classic microfinance and to classic PDL, because specifically this alternative data enables the emerging loan products for the segments that used to be underrepresented, and there's a lot of segments that are underrepresented, even though they have actually stable jobs and they've spent years at those jobs and they have stable payroll. It's just not much. But these people can pay and can repay. And for example, the solutions that are analyzing their payroll, analyzing the details and the dates. This was like one of the customers of Neofin, where we were analyzing the payroll of the customer. We like the system was defining in calculation which amount of loan this customer can actually afford without going broke and without going to this sin circles of like repayments they're not going to make, and issuing the loans that are directly tied up to the payroll, where the charges take place automatically as soon as the payroll hits the customer's account. So that removes the psychological friction from the customer, like, hey, when I'm going to repay it, how I'm going to repay it. They won't even notice repaying this. So this is one of the alternatives that is, to me, it's like a very powerful alternative to like classic microfinance, because it's offered to the audience that previously could only afford microfinance before. And then the loans that are tied up to mobile first, mobile operations, like wallet based lending, where people often do it without even having the credit cards, just using the cards. And it's more like, I would say, it's like it stimulates the healthier financial behavior when you just allow a certain balance for emotional purchases or any kind of like this type of purchases that stays on your wallet. And that you have this balance and you have this limit to use for like pay for buying something, paying in part without going into your credit cards. This is a use case that we're right now implementing in Europe, and we're super excited to populate it over like in other parts of the world. We're very excited getting requests about something like that from the other parts of the world. I'm sorry, I could not hear you for the last minute. Could you repeat, please?
Oh, I said since we're going there, did you hear that?
Yeah, now I can hear you.
Okay, cool. Got scared that we had like a major technical issue. No, and since you're going there, right? Just from an industry perspective, what role do you think fintech should play in financial inclusion? Because you mentioned, these underserved communities and so forth. What role do you think fintech can play in financial inclusion?
I would say that fintech is supposed to accelerate the financial inclusion, because fintech is much more flexible and much more adaptable to innovations than the classic financial industry. And we can see it on like many examples. For example, a small business. So right now, probably the most popular product from the small business segment that Neofin gets requests about is the launch of the financing of private, sole entrepreneurs. Sole entrepreneurs would not be able to access the capital they are starting to access now, even like 3 years, 4 years ago. Now, because of the fintech adaptation and innovations adaptations, where there are the methodologies to analyze their risk profile and credit worthiness, it starts being possible. And same with a small business. If we're speaking about a small business, a flower store, like a nail spa salon, it was traditionally, there was this funny situation that, for example, in North America, if you want to get a decent loan, it's easier for you just to go ahead and apply as an individual, as a consumer, get a credit card with a decent payment, rather than get a loan for your business, just because your business is small and no one wants to finance it. And right now, with all the innovation that we're seeing in the fintech, with all the possibilities to analyze the much faster analyze the documentation information on small businesses, it's just getting easier, and it will be getting easier year after year after year. And I'm just back from the fintech meetup, and a lot of conversations were around democratizing access to capital for the small business, which, in my opinion, is super positive news, because every year, 60% of small businesses close for a reason of not getting access to capital on time, whereas every small business is the development of the community, as the creation of the workplaces, is a lot of positive impact on the community. So I see a lot of perspective in that direction. Right now, Neofin is collaborating. We cannot announce that yet, because this is scheduled to go live in a couple of weeks. So hopefully we'll announce it soon. But Neofin is working now with one of the financial groups that's financing small businesses in 4 countries, so in the North America and Europe, that will provide access to capital to hundreds of thousands of small businesses that could not afford that before. We're very excited to be a part of this process, and to contribute to bringing this to market, and we see a lot of perspective here. We think this is the future of financial accessibility, and this is the future of stimulating people to actually generate value and run businesses and start businesses, instead of then just seeking a one-time financial relief that they will not be able to return.
No, I absolutely love that. That's amazing work. What advice would you give to aspiring entrepreneurs that want to disrupt legacy industries? Because similar to what you did, right? You see this lending process, legacy systems involved, took a year, you didn't accept that. You said there's a better way. You went out and proved that there's a better way. What advice would you give entrepreneurs that want to do similar?
I would say, first of all, start building as soon as you can. Like if you see the problem now, it should probably have been solved yesterday. So just start building whenever you can. It's number one. And number two, start working with real customers again as soon as you can. It's just like it's so important for us at Neofin. It was, there's this issue of gaining the first follower, which is the hardest. So for us at Neofin, we got the first customer, which was a bank, and it was a Ukrainian bank. And it was at the time when Neofin had like 3 people on the board and not much functionality, but a lot of motivation and a lot of ideas how to make things better. And this customer is with us, like is still with us. And the customer has seen all the modifications and all the evolution because the platform went through over 5 years, 6 years, and they're still with us. But having the real customer from the very beginning enabled us to get that real feedback on the problem we're solving, seeing it with their eyes. So probably advice number 2 is just start working, start getting real customers as soon as you can. Don't stick to these like wait lists. Don't build on assumptions too much.
I think that's amazing advice, and that's awesome. A couple. I want to get to some personal questions. What recent failure taught you something invaluable?
Do you mean a failure in business?
Business, since we're talking about business, could be
Yeah, I can tell. Like recently, we were in the tender process with one of the largest opportunities. So this was like one of the Neofin's potentially largest opportunities. We were selected in the top 3, and then we failed. And one of the reasons when we failed, so we ended up not being selected in the end. One of the reasons why we failed was related to certain points regarding the technology and infrastructure that we were envisioning in one way, and we were rather convincing the customer to envision it in the same way rather than being open to adapting. And we felt like whenever, like we have chosen a strategy of being flexible and adaptable for a reason, and whenever we step out of the strategy, it kind of like immediately gives us the hit in response. So we felt like it was the case when we stepped out of our strategy, and we just should not do it again.
That's like, I like that, because sometimes we have a vision and we have, here's our core model that we're operating under, but sometimes to win entrepreneur, to win the business, you kind of deviate from that because you think that's what the customer, that will get you the deal. But I learned something a while ago that they said, not every client or customer is for you, and it's nothing wrong with that, right? It's just being clear on, this is who we're servicing, this is how we're servicing them, and these are the benefits. So I've seen in my past too, when I deviate from that model, things don't, even if I do get the deal, it doesn't really go as optimal as I would have liked. So I like that you said that, because that's a good reminder to stay clear on what you're bringing to the table and your core values. So thanks for that. We're getting towards the end of the show, and I would be really disappointed if I did not jump into you being a calisthenic athlete and being able to 21, because you said like earlier you could do like a total of 140 2 sets. It's amazing. So what are your tips?
No, not in 2 sets. No.
No, I said not in 2 sets. I said in the number of sets throughout the day.
In a number of sets. Yeah.
You get to 140. of full extended down, arms locked, back up. And I want to know, what are your tips? Because I a lot of people struggle from that, but a lot of women that I've met also struggle from just getting their first pull up unassisted.
Oh yeah. Oh yeah.
What are your steps to getting there?
Of course, like getting a first pull up unassisted for a woman is a big challenge, and it's absolutely normal. Just because of the body structure, there's nothing wrong about it, and it was a struggle for me too. I'm a big ambassador of pull ups and all the bars activity in general because it works like the strong shoulder structure directly impacts the areas of the brain that are responsible for like decision making and for clarity of the mind and self-confidence. It directly impacts the posture, and posture is directly connected to self-confidence, which is super critical for any entrepreneur. So I'm a big ambassador of that activity. I would say that first, the first thing is, do not allow yourself to stop on the first one, because usually like the pass of the first four is when most of the people just give up. I'm speaking about women predominantly, just because of how hard it gets and how slow the progress is at the beginning. But just do not stop at that part. Consistency is king. So keep showing up, even for 15 minutes. It's okay. Just keep showing up on the bars. And then work with a good technique, because for me, I had like last year, a year ago, my maximum was 7 pull-ups, and it was like my glass ceiling. I could not go higher. I could not go over 7 pull-ups. And then I started doing calisthenics institutionally and learned the technique that you need to work much more with the whole muscles of your back and without relying only on the biceps. And this was a game changer. So as long as you are over 5, you can add a couple more every other couple of weeks. So as long as you're consistent, it will just grow, because the power is accumulated. And one thing that I want to tell to everyone who's building out their like strengths journey, and specifically women, that there is such a notion as accumulated power. So sometimes you do not see that your strength is built in, but it's built in the background. And at some point, it will just become so obvious that it's impossible not to notice. So just do not stop before it has become obvious, because it might be the case when you're really, really close to that.
When you first started to get that one, did you use bands, or did you just go for it until you were able to get the one? Did you use some sort of assistance? Like, how did that process work?
Oh yeah, assistance is super useful. I was using that. I was using bands, and I was using this like special machine that adds the weighted push to you when you go up.
You know what? Yeah, I've used that before. Like when I had an injury, I get injured here and there, and I couldn't do one anymore. My physical therapist said, go on the assisted machine. Like you add the weight to it, counteract your body weight, and you just keep going down eventually to get stronger. No, amazing stuff, and you just and you started this a year ago.
Yeah, so before that I was just training on my own. I was just doing pull-ups on my own, and I got myself on my own till 7, but then I could not go over 7, and I also injured my biceps because I was overly reliant on the biceps. But then I started doing calisthenics institutionally, like a bit less than a year ago.
You say calisthenics institutionally, what does that mean exactly?
Like in a club with a trainer and with a group.
Oh, okay. Oh, so you're part of like a calisthenics club.
Yeah.
Oh,
kind of.
That's amazing. That's amazing stuff. I'm totally excited about that. Yeah, that's pretty cool. So, it's coming towards our time, and what we do at this show is at the end of the show is we give our guests the stage. So I'm going to leave the stage and give you the platform to talk about Neofin, how people can find you, and so forth, and then I'll come back on.
Absolutely. So it's great. It's been great to be a part of this podcast. Whoever is building their loan product, whoever is interested in pushing their product live at speed and with efficiency, you can find us at neo-fin.com. You can find me on LinkedIn, Svitlanka Sergiichuk, just as my name here on the podcast. You can find me on LinkedIn. Always happy to to check the messages. I'm always glad with people reaching out, because nothing can be better than landing innovations that are emerging on the market. So let's just join the forces and build the future of lending together.
Right, neo-fin.com that people can it's in the comments, and now it's permanently part of the video. Before we go, also guys, we have a newsletter out, the Tech Behind FinTech.com/subscribe. Let me put that on as well. It's a free newsletter. It comes out every week. Now it's part of the show. Definitely visit our website, click on subscribe. You'll get FinTech news. You'll get who's the upcoming guest, different insights. You definitely don't want to miss it. And best the case, it's free. So there's no excuse not to join. Svitlanka, thank you very much for your time today. Really enjoyed talking with you. I'm excited for the things that Neofin's doing in the future, and especially as you keep expanding globally. To everyone else who joined, thank you for joining. Thank you for your comments. We really appreciate it. As I always say, whether you're watching the show live today, whether you're going to watch it tomorrow, a year from now, I thank you for your viewership. We've been at this for a while, and we're here to stay. Stay tuned for next week's episode every Friday, 12 p.m. EST. Once again, you join the newsletter, you'll be updated on our upcoming shows and so forth. To all, have a great weekend. And to my guests, you take care and have a great weekend. It was awesome talking to you today.
Likewise. Thank you for having me, and have a great weekend.
Cheers.
Cheers. Bye-bye.
Bye.
Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.